In today's video, I will yet again reveal my current dividend growth portfolio and the progress I have made so far. So if you want to know how much dividends I'm receiving with a 10k portfolio, how much of my expenses are covered with that, and how I plan on further shaping my portfolio, then make sure you watch until the end. Hi everyone and welcome to my channel. I'm Tom from The Dividend Attitude. This is a milestone video because it is my 30th video on this YouTube channel. Hopefully lots more to come. If you have any requests for future videos, please let me know in the comments below. In my last portfolio update I showed you that I was nearing the 10k mark. In the update of today I'm happy to share with you that I have crossed the 10k mark once again. Besides that, I will also show you how much dividends I received this month, how much of my expenses I can cover with that, how much daily and hourly wage I would receive if it was a job, and how close it brings me to my end goal. Lots to go over, so let's go. My current portfolio looks like this since the last update. If you haven't watched that update, I suggest you to watch that one as well, since I go over all my positions in some more detail as I will do here. It is now suggested for you in the top right corner, so you can click on it there. So the current portfolio value stands at $10,140 and I've received a total of almost $880 in dividends. Money I did not have to do anything for. My portfolio consists of 9 dividend growth companies, one company that has halted its dividends for now, CVS, and one company that has suspended its dividends, SKT. If the price of GD stays around this level, that will probably be my next addition to my portfolio. It has good financials, a good dividend growth history, and stable prospects considering a large portion of their revenue comes from their long-term defense contracts. And just as important, it further diversifies my portfolio in the industrial sector. If you want to learn more about GD, I did an extensive overview in episode 23, now suggested in the top right corner. If you liked the video so far, don't forget to give the video a thumbs up and make it turn blue. Also, don't forget to subscribe if you want to stay updated on future content. And then my dividends for the month of August. This month of the quarter is always a decent month. Year over year there's a slight increase in dividends. However, compared to the same month in the last quarter there's a big decrease due to the dividend suspension of SKT. We can also see that in the overall trend. There's a dip compared to the last quarter. On average basis, my portfolio now pays me $34 per month, $1.12 per day and $5 per hour. Nothing exciting yet, but at this stage it is all about the progress. Speaking about progress, my annual dividend goal for this year is $500, so I'm a little bit behind. Keeping the end goal, 30k annually, in mind, I'm now 1.36% of the way there. It will be interesting to see how this develops over time, so I'll keep including this in my portfolio updates. Since the goal is to be able to cover my expenses at the very minimum, it is also interesting to see which expenses are already covered by my dividends. My expenses consist of insurances, mortgage, car payment and gas, home association fees, streaming, internet and some more, so pretty typical. It is good to see that my dividends are currently covering my phone bill of $15, my contact lens subscription for $10 and my life insurance for $9. One thing I'm also planning to do is liquidate my portfolio in Bink and move it over to Trading 212. So in next month's update there will probably only be 2 portfolios. Bink has introduced monthly service fees on top of their already outrageous fees for buying and selling. Hence that is why I'm moving away from Bink. Zooming in a bit more on one of my holdings to see the dividend growth, a good number to look at is yield on cost. This is a bit of a feel-good number since if you would sell then you are only able to get the current yield. What it does reflect though is how much your dividends have grown based on your initial investment. So when your yield on cost is higher than the current yield, it usually also means that the shares have also appreciated in value. For example, Omega Healthcare Investors has a yield on cost of 9.88% for me and a current yield of 8.62% due to increased dividends and price appreciation. So what are my plans for the future? There are a few things I plan to do. One of those things is diversifying in the sectors I don't have yet in my portfolio. So those would be energy, materials and telecom. I'm not so sure about the energy sector, but I'm definitely going to look into the materials and telecom sector. For materials I have an eye on Sherwin-Williams and for telecom I'm going to have a look at Comcast. I also want to add another utility company to keep my portfolio beta in check. It is now hovering around 1, so I would like to keep it there. One utility I really like is Next Era Energy, because of its focus on renewables. I also did a fundamental analysis of Next Era Energy in episode 16 on safe dividend stocks to hold during a recession, which is now suggested in the top right. Another thing I want to do is bring more diversification in the overall dividend profile of my portfolio. Right now it consists of a bit higher yielding companies with medium dividend growth. I would like to add some higher growing companies with low yield to that mix. So companies like Visa, Apple or Microsoft. The problem with all of these? They all seem quite overvalued right now. This is definitely a long-term plan which won't happen overnight, but this will be the process to further shape my portfolio. I hope you enjoyed this monthly portfolio update. The next portfolio update will be at the end of September and will probably include a new addition and only 2 brokers instead of 3. If you did like this video, I would appreciate if you gave the video a thumbs up and consider subscribing to stay up to date on future content. Until next time, bye bye.